Hello guys, welcome back to my channel. Today I'm going to be reviewing what happened with gold from around 15th Feb this year, 2024, and we are going to look at how you can actually use only price action. Price action is king. Whatever price action prints out on the charts is what we are going to follow. You know, without price action, you don't have any strategy, you don't have any plan, okay, for trading. You have to watch the charts to see what price action is printing out for you. We are going to be reviewing gold, what happened with gold throughout the year, reviewing what price action was communicating to us and the clues that price action was giving us so that we can take those trades. The communication that I get from price action in candlestick patterns, in chart patterns, in market structure, support and resistance. Those are all the footprints of price action. If you are able to understand that, then you are going to be a better trader come 2025. So watch this video till the end. I'm just going to use one asset to demonstrate how you can use actually price action only, purely price action to trade. And so watch this video till the end, give it a thumbs up, subscribe to the channel. Let's go. Guys, just to illustrate to you here on the charts using the gold 4-hour chart, candlestick patterns, chart patterns, trend lines, support and resistance, you can trade and make money just by identifying what price action is printing out for you on the charts. Price action is king. So if you just watch this video till the end and see how just with this one move of gold all the way to the present time, and you can see that throughout the year price action was printing out for us candlestick patterns, chart patterns, creating support areas and resistance areas where we could have actually taken advantage to trade, all right, based on past data. So let's look at this. Take a look at this here. Okay, so you have a trend line here. Okay, I'm just beginning off around 14th Feb 2024. That's where gold really started taking off. So we have this trend line over here. Okay, I can already see a pattern forming. Just to remind you, this is a 4-hour time frame. So this would be a resistance area. As you can see, there was a resistance there, there was a resistance there, and the price was rising to the upside. There was a support here, there is a support there, there is a support there. So clearly price seems not to be breaking to the upside. But then we see a formation here. You can see this is an ascending triangle. An ascending triangle is a chart pattern which indicates a possible bullish continuation. A bullish or ascending triangle indicates that there is a decrease in selling pressure. As you can see, there is a decrease in selling momentum and a possible breakout is anticipated to the upsides. An ascending triangle looks more like this. It's looks more like this. All right, you have the upper resistance and the lower level like this. So this would be the upper resistance level of that. That would be the resistance, and that would be the support of the ascending triangle. This would be the support right there. Okay, so typically you have a movement in this fashion where you have price is rallying to the upside, but then it meets a little bit of resistance there. It's not quite breaking out, but it's forming higher lows at the bottom, okay, until it reaches a constriction point here where it breaks out and returns to retest this level before rallying all the way to the upside. So typically this is how, okay, this is the ascending triangle pattern. If you see this, typically traders are looking to buy at this point here after the retest. So they would be buying at the retest here. So it will be buying at the retest right there. Okay, so this is typically what an ascending triangle is. We see it also forming here. We see that the price was moving to the upside, and when it broke out, you can see clearly that there was a retest here. Okay, so you'd go to your lower time frames and place your buy order right there, and you'd place your order after the retest, place your stop loss just below the resistance of the ascending triangle, and ride that price all the way up there. And at every retracement, At every retracement here, you're placing a buy order. Because buy order there, and you're placing your buy order at this retracement, you're placing your another buy order after that retracement. All right, so you are riding this all the way to the upside. Okay, so this was a very good opportunity for those who saw it the early part of the year. Gold was just bullish. All right, from this point to this point, gold was bullish all the way. 10 days, 8 hours, it was just rallying to the upside. Think about how much money you would have made here just watching price action and the candlesticks and chart patterns and formations it's printing out for you. So then we get to this point here, okay? First of all, we have here a chart pattern. This is an ascending. This is an ascending triangle, okay? When we get here, we see this formation here. There's this retracement right there. And then you would see here, okay, that the price formed a falling wedge pattern. This is a falling wedge pattern. A very good breakout continuation to the upside, okay? It looks like this, okay? It would look like this. It has a part that is falling, upper resistance, which is in descending like that, and then you have another lower support is also descending in that fashion. So both of them are descending like that. So this would be a falling wedge pattern. Looks like this, okay? So price is rallying to the upside and then it begins dropping in that fashion, okay? And then the anticipation is that it would break above here and retest resistance, okay, of the falling wedge pattern. And then after the retest, we are considering buying to the upside. So we would typically buy after the retest right there. Okay, so this is a falling wedge pattern and it indicates a possible continuation of the bullish momentum. So as you can see here, this would also be the resistance and that would also be the support of that falling wedge pattern. So that is price action is just printing out for you, okay, clues and giving you opportunities to enter the trade. So here with the falling wedge pattern, we'll just place our buy order right there with this impulse breakout. When you go to the lower time frames, guys, you'd see that there is a retest over here, okay, and you'd place your buy order after that retest right there. Okay, usually the target is at the top of the wedge here. So this would be your target for profit. So you'd place your target right there. This would be your target right there. So as you can see, the price even went beyond the target, giving us almost a 1 to 3 risk to actually a 1 to 3 risk to reward ratio above. But even if you targeted here, it would be a decent 1 to 2 risk to reward ratio, as you can see. Right, so the price retraced to retest this previous breakout point, as you can see here, okay? So at that point, okay, we just know that the price action is probably returning to retest these levels. So we wait for what price action would give us around this area, okay? Wait for price action to give us a confirmation to buy at this point after the retest. So when we have our bullish candles moving to the upside, okay, we are not really sure until there is a breakout so we see that momentum moving to the upside, but we are not really sure. For the conservative guys, we wait. If you want to risk, you can buy from here after this retest, but the more conservative guys, trader, would wait for a breakout of this point here, all right, because this was the previous highs. So you'd wait for a breakout here, okay, before you can consider buying. So there was a breakout. As you can see, there was a breakout here, okay, and then you'd go to your lower time frames and look for candlestick patterns confirming your entry for a buy. So you'd buy again here. So many opportunities, and all of these are running so many pips up, all right? So this remember, this is a 4-hour time frame. So you are taking trades 1 to 4, 1 to 5, 1 to 6 risk to reward ratio. Think about this move after this. Okay, so you are stacking trades. At every retracement you are placing your buy order. At every retracement you are placing here, you're placing there. Okay, you are entering your trades there. At every retracement you are stacking your buys. All right, so at this point here we see a support level. Okay, and we see a double bottom. Okay, as you can see, first touch there, and then we see second touch there, and then we are looking at a breakout of this neckline of the double bottom. Okay, a breakout of this is what we are waiting for. It doesn't have to be picture perfect for you to identify or to confirm this is a double bottom. Okay, it doesn't look picture perfect, but a double bottom formation is simply this. Okay, it is simply like this. Okay, once the price breaks this neckline here, you are considering a possible reversal to retest this point before you can place your buy order. This is a double bottom formation, and that is what we see here. So we are looking for a breakout of this point. Okay, and the breakout happened. As you can see, a breakout happened right there. This is a breakout. Okay, this is where the breakout took place, right there. Breakout took place from here, and now this is our retest right there. And now after this retest, we are placing our buy order right here. You can see that this is a double bottom formation. Okay, so we would place our buy order right there. After at least 3 bullish candles, we are placing our buy order, and we are targeting a 1 to 2 or 1 to 3. This was a clean 1 to 2, a 1 to 3 risk to reward ratio, close to a 1 to 4 risk to reward ratio. This would be a close to 1 to 4 risk to reward ratio. You take this trade. Okay, so we are continuing to the upside, still stacking trades. So even after the double bottom here, you'd buy here and wait for a breakout here, and then you are buying here also. Okay, continuing to stack at every retracement you are buying. So your target would be up here. This would be from here to there. This would be your target. Okay, this would be your target, these previous highs right there. That is why when the price got here, there was a reaction. So your target would be ideally at this point. Okay, so you'd still take your trade right there. A 1 to 3, perfect 1 to 3 risk to reward ratio you take here. Okay, so again we see here there is a support level here. As you can see, this would be a support level. Okay. At this support level we have an inverse head and shoulder pattern. It doesn't have to be picture perfect, guys. You can see right there, this is another shoulder, this is the head. Okay, and that would be the other shoulder right there. Okay, we are just waiting for a breakout of the neckline up here before we can consider that buy. Now, when the price gets here, something happens. There is this formation here that I can see. There is this formation that I can see. All right. The price forms a bullish flag. This is a bullish flag formation. So you can see a bullish flag formed right there. Okay. Price just bouncing in between here, and then there's this breakout, and then the retest of that area before the price rallied all the way to the upside. So that's a bullish flag by a chart pattern. Okay, so looks more like this. Okay, just to create a picture for you, bullish flag would look something like that. Okay, and then you have a bullish market, but then you see a flag pattern like this. So the anticipation is that the price will break above here and retest and continue to the upside. So you are basically buying at the retest right there. After the retest, you are buying. All right, so this would be a bullish flag pattern. That would be a bullish flag pattern right there. All right. So So this would be the resistance, okay, of the bullish flag, and that would be the support of the bullish flag pattern. All right, guys. So this is the pattern that we see here. And as you can see here, at the retracement here after the retest, if you placed your buy order, okay, you placed your buy order right there and place your stop loss just below, inside the flag right there, and continue riding this all the way to the upside. At every retracement, you are placing your buy. This would be another buy, okay? And your second buy would be after this retracement here, okay? You would place again your buy order at this point here, okay? You'd place again your buy order right there and target another high, okay? So if you want to know how high that retracement would go, how high the price would go, you just use your Fibonacci extension tool, okay? You drag your price from this point to that point, okay, and drag it back down here, and then your retracement tool would tell you how far. Your continuation tool would tell you how far the price would go, and you can see your first take profit would be at the Fibonacci extension tool would be 38.2, the second would be 50%, and the third one would be 61.8, and you'd exactly hit that level, 61.8, and you'd be out with your profit, okay? So that would be good, okay? That would be a good trade still, and that would be a 1 to 3 risk to reward ratio trade. So guys, this is how you would trade. And if you wanted to determine where you would enter here, you would still use your Fibonacci tool from here to that point and drag to the right. As you can see, the price bounced off at a 50%, okay? We saw you would confirm your buy order, all right? Doesn't always touch the golden zone, guys. So that you have to know, all right? So at this point now, we see head and shoulder pattern. So guys, this would be the head, all right? And that would be the shoulder right there. That would be a shoulder, first shoulder, and then we have another shoulder right there. So this would be the head and shoulder, and this would be the neckline, right? So the neckline is right here. A head and shoulder pattern looks more like this, okay? You have a shoulder, then you have a head, and then you have another shoulder right there, and then, yeah. So it looks typically like that, the head and shoulder. It's also a reversal chart pattern, okay? If it forms at the resistance level, it would indicate a possible reversal to the downside. So you have a head here, left shoulder, right shoulder, a break below. Typically what traders are looking for is a retest of the neckline before they can sell to the downside, okay? So that's what most traders would be looking for. So here we are looking for a retest. As you can see, the retest happened right there, and we would place our trade after a bearish candles below here, order just after a couple of bearish candles right there, and would target all the way. You can see this move, it was like a 1 to 5 risk to reward ratio. You take your trade all the way down here. All right. So this is the current situation with gold. As you can see, this is the current situation. It formed a lower low. This was a lower low right here, major one on a higher time frame. Let me just magnify. This was a major lower low, all right? This was a major lower low, but now gold has formed another new low right here. And there's this retracement back to the upside. This neckline of the head and shoulder was a major breakout point, okay? So even at this lower low, okay, you'd still consider, okay, when the price action formed a kind of higher low here, you'd wait for a break out of this major break out of this major swing high right there. This is a higher low, right? this would be a higher low right there. This is not a legitimate lower high, as I told you guys, because this is a higher low. So now this is a legit lower high. So we are waiting for a breakout of this before we can consider buying back to this neckline. This is what happened. So at this point, we would place our buy order after the retest. You can see a breakout and that retest. And we are going to buy all the way back to this neckline would be our target. And we take that buy all the way to the upside. All right. Here, we are not so sure, but here we are sure. Why? Because the price broke above this lower high, which is a legitimate lower high, right? Why is this a legit lower high? Because after this lower high, there was this lower low created, guys. But this is not a legit lower high. Why? Because it created a higher low here, right there. Remember the previous lesson? All right, so this would also take a buy order right there after that bullish engulfing candle, and we would take a 1 to 2 risk to reward ratio, or 1 to 2.3 risk to reward ratio thereabout. And so again, there was a drop from that point, okay, again back to this point here, the breakout point, okay. So this became more or less a consolidation area, okay. So again, price returned to this point. Currently, this is where we are at. So the price dropped from here to this point. Why? Because of the Fed's cutting interest rates and the US dollar became a little stronger. That's why we see this drop all the way to the downside. So what are we anticipating? Okay, we are anticipating a possible drop back to retest this previous major breakout point here. Okay, we are anticipating a drop of gold back to this major. You see this previous breakout point here. A price is retesting this previous breakout point right there. There is this level here. There's this level I see, and because the lower low was created here, I anticipate that after this breakout, okay, this is just a retest of this previous zone, okay. What we are looking at is a possible drop all the way back to this, and this would be our first target here of profit, all right. This would be our first target right there to sell gold to this point, and I believe gold would drop to this point, okay. Also retesting this previous breakout point right here. Okay. It can drop back to psychological level of 2,500 right here. That would be a psychological level of 2,500 before we can see a bullish movement back to the upside. The target would be this, the head of this shoulder right there. That price would be the target, okay. This would be the target up here. I forgot to show you guys. This would be another head and shoulder pattern, okay. This is another head and shoulder pattern right there. So as the head, and that would be, this would be the left shoulder and the right shoulder, and this would be the neckline, all right. So this would be the neckline right there, okay. And after the break of the neckline, and you got your lower time frames and you are placing your sell orders right there. After the retest, you are placing your sell orders and you're targeting a 1 to 2, 1 to 3 risk to reward ratio back to this point here, okay. Back to this point here. Now we are waiting for this price to fall below. As I already said, we're anticipating price to, as it is reversed, to retest these previous levels, okay, before gold begins to rally back. These highs would be the target when gold begins to rally back upside. So guys, this is how you would use price action, purely price action, to determine your next move. I can even show you another one right here before we close this. You can see this consolidation right there, and a breakout. There was a consolidation there. I remember this was a good trade for me. Consolidation, and then after the consolidation, so after this breakout, okay, I waited for that retest. All right, I waited for that retest and I was buying, okay, all the way to the head of that pattern. Okay, this was a very good trade also. Placed my stop loss just above there and below there, and targeted all the way up there. It was a very good trade. My target was a 1 to 2 just here, okay, the shoulder, the neckline of the previous head and shoulder pattern. All right, so thank you guys for watching until this point. If you haven't subscribed, consider subscribing as I bring you free weekly content on here. This is the end of the year. I just showed you the price action from around February of this year to what is happening currently right now and what I project. Gold is probably going to rally back to the upside, to the historical highs of 2,900 something. I believe next year gold will hit 3,000 US dollars per ounce or even more.